Hey traders, this is Christian from Hertz Tribeca Trade Group with a video on the 5 most interesting themes and option trades from last week. Today is Sunday, April 17th. And number one, the first thing that just happened today was the OPEC meeting ended, and it looks like there's no production cut. So I think that's what the expectations were coming into the meeting. However, you never know. And we did see a move up in the beginning of the week last week in oil, only to be faded towards the end of the week. So that was the main event that came out today. We also have another big event coming out of Brazil, which I will get to that. But number one, let's look at the S&P chart. And, what we have here is it almost looked like at the beginning of the week last week that we were going to break down and break into value. However, the rumor on OPEC, as well as some good economics out of China in terms of trade numbers, propelled us higher. So we moved to this trend line here. So really difficult to say, the next line in the sand, which I know people and technical analysis have been drawing lines in the sand on this whole big move up here that we've seen since about 2 months ago. So right now, the latest line in the sand is this particular trend line. Note on the weekly chart, we are in the middle of value. The point of control coincides very closely with that trend line. If we can get above the point of control, perhaps we can see a move higher to 2117 in the S&P, 2117 in S&P futures. Okay, so what I always do is look for clues and signals in other areas of the market, commodities and sectors that could give us a good glimpse of what that next move is going to be in the S&P 500. So I'm going to go through that and some of the interesting options that we saw last week. So number one is oil and energy names. Last week, if you look at the weekly chart, I'll get to this line here. This yellow line is a version point of control. It's a point of control that's never been touched from a previous time frame. I will get to that. But on using the value area study, what I'm looking at on the weekly chart is back on the week of 314, we climbed into value. We made a short-term high of about 42.57. We faded that move the last couple of weeks, and then last week we saw a move right back to where we were. It actually got a little bit higher than that, I believe. But note, we got to this line, and number one, we rejected it, and number two, we also rejected the value area on the weekly chart. So two things that I found interesting there is a rejection of this particular line and a rejection of the value area on the weekly chart. So could we go lower after no deal announced by OPEC? It could be, but I think a lot of that was already priced in. I don't think there was too much expectations that people were riding on in terms of a deal. So that already may be baked in. However, we can retrace a little bit more of that move. And here is that version point of control. Again, it's a point of control where buyers and sellers met from a previous time frame that had never been touched before. So here that line is, and note that it does have some importance there, as we've gotten to it now once, twice, and rejected it. So that is the line I would keep an eye on. Also on the daily chart, this red line, which is 40.87, which is where we got back into this value area late on Friday. Here's the activity that a lot of big put buying in XOP. Why XOP? Because out of the 3 energy ETFs, XOP, OIH, XLE, XOP is much more volatile between those 3 names. XLE has 25%. 25% of that ETF contains Chevron and Exxon, 2 of your bigger, more conservative, more prepared names in terms of the energy sector. XOP is not that way. It's got a little bit of everything. That's oil and gas, explorers, and producers. So big, heavy put buying in that, all short dated, all for this week's, for 422 expiration, as well as we saw monthly puts being bought. So pretty big positioning there. So that's the number one signal that I saw last week, is a lot of energy put buying. Again, that's in the XOP ETF. Number 2 is the banks. Really good performance from the banks last week on expectations that were much lower. And this seems to happen in trading from time to time, whenever everyone is kind of all on one side of the fence, as everybody thinking that the banking earnings were going to be poor, and that not much can come out of the banks. What happens? The banking names actually beat some of those lowered expectations. So last week we had JP Morgan, Wells Fargo, A couple other names report last week. Bank of America also reported last week, and you can see KBE actually went up on those news from depressed levels. This week is another interesting week in the banking group. We've got a lot more earnings coming out. We have Morgan Stanley on Monday. We also have Goldman. We have Fifth Third Bank Corp. We have a number of other regional banks also that will report this coming week. One trade that I thought was particularly interesting is KBWB. And this was a risk reversal. You see calls and puts going up here, 18,000. I find it very interesting that they use KBWB. What is KBWB? Well, there's essentially, four financial ETFs out there. XLF, which is not all banks. So if you're looking to play banks, XLF is not the right ETF to do that. Then the other three ETFs that are in the space are KRE, which is regional banks, KBE, which is all banks, regional and your money center banks, and KBWB, which is just your money center banks, which are your largest banks. That's your Wells, your JP Morgan, your Morgan Stanley, your Bank of America, those types of banks in that particular ETF. And you could see that it looks like calls were being bought and puts were being sold. Now, I don't know if this is an increase in the open interest. The volume matches open interest, so it could be an unwind. This was a trade that they put up on March 31st. So I'll check open interest on Monday to see if they're doubling down in this particular position, or if they're taking it off. The original trade was bullish. They were buying calls and selling puts. So taking a look at this sector versus the S&P, it's a little bit eye-opening. Here's when you graph KBE over SPY, you could see that over the last year, banks have really underperformed. So if you think the S&P could run a little bit further, the banks could be a nice catch-up trade here, as they're certainly still from depressed levels. All we saw is basically a move up from the lows the last 2 weeks. So there could be a little bit more to run, maybe up to the 100-day moving average. And I think it sets up for an interesting pair trade. If you think the market is going to go sideways or move higher from here, long banks, short S&P is an interesting trade. So that was number two. Number three is technology. On Friday, we saw a huge move in Apple. This was based on a production cut in the iPhone. You can see this came out Friday afternoon, and a big move down here. You could see from about 112 down to 109. Interesting, what I find is when you look at a chart of Apple, two things to point out here is you could draw a trend line right here. This is going back from June of last year, and we've rallied up to this trend line, rejected it, rallied up to it again in November, rejected it, and we've rallied again back up just recently, and I'm touching this trend line, and it'll be interesting if we can break above it to get out of this this downtrend, or if we can, or if it's going to reject it and move back down. It's also the 200-day moving average the stock is also fighting with at the same time, and the 200-day moving average is sloping down here. So if it cannot get above this trend line, I would see possibly we can get some more downward pressure following Friday's move in Apple. Also, all of the suppliers were also very weak. Qorvo was down 3.8%. Skyworks was down 2.2%. We also saw some weakness last week in names like STX. We saw some big put buying in Seagate Technology. You could see the chart, the daily chart in Seagate, really looking ugly there. So STX moved down pretty hard. Intel also moved down on Friday. That was down 1%. So what I'm watching for this particular option trade, well, we haven't seen that much put buying in semis, but that's what I'm watching for next week. If you look at the semis ETF, a nice move from the lows, like many other sectors back in February. However, it's looking like it's running a little bit exhausted, as it's been treading sideways here for the last 2 weeks. So the level that I'm watching in SMH is 54.22. That's the top of value on the daily chart. And what I'm going to be looking for next week is more put buying in the semi space. That is a trade that I may follow, depending on the particular name. So that's number three theme. Number four theme is Brazil, EWZ. As I mentioned, there is an impeachment vote that is underway in Brazil today. We don't know how that's going to turn out, but we did see a lot of positioning in the EWZ ETF last week. A lot of call buying. Just like in XOP weeklies and monthlies, the reverse of that, call buying in, there was actually some put buyer last week as well, but I don't think this was opening. These were all opening trades, weekly calls, 30s again. We also saw the Mays, so the monthly call buyer going out. This was on Friday. So I think very interesting activity in Brazil. It has had a nice run up. Can it get through the next leg? If you go to the weekly chart, it is above now the 200-day moving average. If that impeachment vote goes through, you could possibly see a move up to the top of value, which is all the way up 33.78, which is about $5 from where we closed on Friday. Also, there's been a lot of other positive activity. If you look at Peru last week, a nice move back on the weekly chart. I would also watch the top of value. That's 30.53 for a continuation of a move. Chile, ECH is the ETF in that space. Same thing. All look like they're in the middle of the value area on the weekly chart. One ETF that you can play this theme with is ILF. A big chunk of ILF is Brazil, but you also have some exposure to Peru and Chile in this particular ETF. Again, that's ILF. That's one way that you can play the whole Latin American move, as it has now broken out of this downward trend line. So that's number 4. The last theme of the week is IWM. This is a chart that I'm watching. If you go to, first of all, on the weekly chart, it is trying to break into value. You can draw a trend line right here. So it's up against this trend line. Looking at the daily chart, 2 things point out to me here. Number 1, we're right at the 200-day moving average. So if we can get above, and we've been kind of consolidating here for the better part of a week, if we can get above this blue line, the 200-day moving average, the next stop, I would say, just like I talked about aversion point of control, there's also one here in IWM where a lot of buyers and sellers have met from a previous time frame, and we've never touched this point of control before, and that level is up about 114. Call it 114.50. So if we can get above the 100-day moving average, the 200-day moving average, the next target I would say is 114.50. And that would be my last target if you were long IWM. Note the performance of IWM last week was very strong. The RTY index was up 3% last week, so it outperformed the S&P very nicely last week. So I would look for that, and then also, keep in mind, if you're looking for an area where it fails, again, is the 200-day moving average on the weekly chart. Keep in mind that we're right at that bottom of value, which sometimes, what you want to see if you're bullish is a move into value. So we just closed above that on Friday. But of course, we may not hold it for long if we cannot get over the 200-day moving average. So that's it. Those are the 5 themes and unusual option activity that I saw from last week. Oil, banks, technology, Brazil, and small caps. So thank you very much for watching today's video. You can find us at TribecaTradeGroup.com. We do have a special running on our trading room. You essentially get 2 weeks free, or a 2-week trial into our trading room. Please go ahead and try that out. I don't think you'll be disappointed. And we also, if you can't be in the trading room all hours of the day, we also have a newsletter special where we also send out real-time targets and entries and exits on trades. So again, thank you for watching the video, and good luck trading, and have a great week. Thank you.